Put your head on my shoulder. That went bad real quick. What in the world? Try that again. Wiki, rewind that. Put your head on my shoulder. Whisper in my ear, baby. Let's take a look at, oh my goodness, where we stand here on Tuesday. This is June 13th, 2023, out here live. We'll do it live from the farm fields of Valparaiso, Indiana studios. So let's see where we're standing. We got a little Albertsons right there, $24 call, 5 contracts. So let's see if we can't get any action on this. I'll plan to roll it down to 22. That'd still have me in the money. You're in the money. You're in the money. It's a monthly. I prefer those. Now I'm rethinking my strategy. I may just sell this song going off. Let's go to, let's see here, Procter & Gamble. I'm looking at them today as well, the Procter and the Gamble. Does Albertsons pay another divvy? I'm trying to reduce the number of companies that I'm involved in. Currently, it looks like they have, what will that be? Ex-dividend date might be third week of July. The third week of the Jew and the lie. That sounded wrong. The third week of July. Yes, let's see. Yep, last couple of years have been the third week of July. You know what? I think I have talked myself out of rolling that. And I may sell that off at just a little meager minor profit once it expires. I want to reduce my number of positions. I told you that yesterday, repeating it again today, which reminds me. So CTRA Energy might be the victim of that strategy. Currently trading above the strike price. It is at $24.79 and we are at $24.50. Well, why sell it at? And in fact, I am in it for more than the strike price. So if we look at CTRA Energy, I have an average cost of $24.76. But hey, wait just a minute there. I ran some numbers for us to look at to show you my thought and letting it go. Okay, one, it creates more cash in my pocket. Okay, I've got a theory, I got a theme. I hope I'm wrong, but I might be right as to what's going to go on in the second half, particularly the fourth quarter, as far as this economy is concerned. But here is our CTRA Energy breakdown. If we go back to the beginning, including Friday, so this is up through expiration date of Friday, it would be 101 days in the trade. And I paid $19,808 for 800 shares. And then I started selling calls, rolling calls. I bought that to close, roll, call. And if you look at these dates, these were 2 separate trades. So they weren't all 8 of them together. 2 separate positions was going on at the same time. Collected this dividend of $342, which was very nice. Rolled the call, 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 rolled out the barrel, bought it, closed, sold another call, and then rolled it, and then collected a dividend of $160. Hey, why is that so different than the other dividend? I'll tell you and show you exactly why. And this is part of the thesis for allowing it to go. Is in that first quarter, CTRA paid me a sweet special dividend, which was nearly twice as much as their fixed dividend. Well, this quarter, they're only paying the fixed, which I've already received. So I'm thinking about, letting them go. We collected a total of $2,012 in cash flow. If we do let them go on on June 16th, for $24.50 a share, that'd be $19,600, which is $208 less than what we paid for them 101 days prior. However, if we look at the math, take what we would receive on Friday, $19,600, add the $2,012 in dividends plus premium, we end up with $21,612 minus what we paid, $19,808. So we had a net profit of $1,804 in 101 days. So if we take the 1804 divided by the original investment of $19,808, that equals a 9.1% return in 101 days. So we divide it by 101 days, multiply it by 365 to come up with an annualized return of 32.9%. So we like those numbers, and it frees up more cash flow in our pocket to make moves in case some of my investment thesis comes true. And probably most importantly, it reduces our number of positions because I can barely do two things. No, I can't even do two things at the same time. So I want to reduce my positions. I've got a lot of money in the energy stocks. My favorites would be Valero and Devon Energy. So I will probably keep those two positions and try to eliminate all of the other energy positions, even though my grubby, greedy little hands is probably going to roll the EOG. I'm going to run all the numbers on those. And the reason is because EOG is about a month out on ex-dividend. Let's take a look. And they're going to pay a special this quarter as well. So EOG, yeah, you know me. If you look at the EOG, we've got ex-dividend date of July 14th. So that's just right around the corner. And hey, wait a minute. You are what they call a liar. I'm not a liar. I'm just confused. So they are only paying their fixed dividend as well. Why, in my mind, I guess that would be Devon Energy. So I'm going to have to run the spreadsheet on EOG. We may let that son of a gun go too, but Devon is definitely paying a special this next time around. Is that correct? They are. So on June 14th, which according to my Swatch Watch is tomorrow, we'll lock in both their fixed quarterly of 20 cents and the special of 52 for a total of 72 cents per share. So I got to make sure my Devon position is protected. So we may let that EOG go too as well. So we will take a closer look at that. But I'm pretty much convinced as of this moment, if I'm convinced to let CTRA go, essentially for less on the strike than I paid, I should definitely let EOG go because that's way more than I paid. This 113 strike, I think I'm in it for 106 and change. Let's look. Let's take a look. Let's take a look at it now. Yeah, 106.06. So we'll run the numbers, but we'll likely let that one go as well. And Ford, I'm going to finish my numbers. I started the numbers on those. I'll probably let Ford go also. Did they breach 14? They did. But I've been holding this thing for months and months. And my entry, I think, is like at 1350. Is that correct? What is our 1336? So we'll make a couple pennies plus all the dividends and premiums, which will be a nice return on capital. And I still believe in Ford. I want to reduce the number of shares that are in my head, and I want to have a nice, stable growth dividend portfolio with Johnson & Johnson, Procter & Gamble, Coke, Pepsi, Altria Group, Philip Morris, a handful of those sweethearts along with some of the more riskier ones like the oil and energy type stocks. So we'll take a look at that, but I wanted to give you a start to this day before I move on. Probably looking at letting Southwest Airlines go as well. Merck took it on the chin after I bought it. Way to go. You're such a good investor. I think though, again, I'll say it. I said it before and I'll say it again. All those investment properties I bought years ago, I bought all of them wrong also. So I'm repeating that same fundamental pattern that I apparently have, but every single one of those real estate investments turned out to be very nice. And that will be the same thing here with these dividend stocks as well. So that is the start to the day. We'll see what we need to do. We need to make some moves because I am leaving again, or I'm leaving on Thursday. And this is what we'll do. We will go from, whoa, it's gone now. Go back to the directions. Why'd you do that? We're starting in the farm fields of Valparaiso, Indiana. And then our first day, we're going to drive to Sioux Falls, South Dakota. So it'll be about 9.5 hours. And with Sparkles, she loves to I always tell her, like, don't drink so much water. Well, I gotta go pee pee. We gotta stop literally you can set your watch to it every 2 hours. So this 9.5, I'm sure we'll stop for lunch and stuff. This 9.5 will probably be more like 11. So here we go. We'll start here in the farm fields of Valparaiso, Indiana. Boop, 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 boop. Drive up through here, and then I'll probably put Sunshine Kid 3 behind the wheel, and he can drive this straight route all the way to Sioux Falls. We'll stop there, and then the following day we'll drive to the Badlands National Park and spend, I think it's 2 nights. Is it one night? 1 or 2 nights there. Then on our way to Wyoming to Devil's Tower for 1 or 2 nights there. Then on our way to Yellowstone. So we got to manage some of our positions so that I don't have to be concerned with them as we go. So I'll check back with you, share my investment thesis going forward. And I'll probably be wrong, but at least it's something. At least it's a thesis. I'm out there trying. I'm swinging for the fences. Or am I hitting singles? Probably like laying down a bunt or two. On occasion, I'll hit a double. Not necessarily looking for home runs because I already missed on a few of those, obviously, because I was right on a handful of things like Qualcomm, right. What else was there? There was Amazon early on. Google, when I had Google for like $92, but then of course those were all swept away from me. So does that make you wrong? A little bit. So I want to get into more of a fundamental portfolio that provides the income, as I've said 1,000 times, and I'll say it again. So dividends plus covered calls, and some puts here and there for sure. That's what we're looking at on this beautiful Tuesday. It's actually not beautiful. It's like rainy and miserable out there. What's the temperature? It's supposed to be summer, isn't it? Almost officially summer, but 60 degrees and cloudy. Come on now, Valparaiso. I will check back very soon. See you in that video. Subscribe, like, comment, all of the above.